Are you a salaried employee in India looking for smart ways to save taxes in 2025? Well, you're in the right place. In this video, we'll uncover the top 5 tax-saving investments that not only reduce your tax liability but also grow your wealth. Stick with me till the end, because we also have a bonus tip that most people miss. 1. ELSS Mutual Funds. First on our list is the Equity Linked Savings Scheme, ELSS. ELSS comes under Section 80C of the Income Tax Act and allows you to claim deductions up to 1.5 lakh rupees per year. It has the shortest lock-in among tax-saving options, just 3 years. Being market-linked, ELSS has the potential to generate higher returns compared to FDs or PPF. But remember, since it's equity-linked, returns are not guaranteed. Yet, for long-term investors, it's a top choice in 2025. 2. Public Provident Fund, PPF. Next up is the Public Provident Fund, one of the safest and most popular tax-saving tools in India. PPF has a lock-in period of 15 years, but partial withdrawals are allowed after 7 years. The current interest rate is around 7.1% for Q1 of 2025, and the best part, both the principal and interest are tax-free. It's ideal if you want safety plus tax benefits without market risks. 3. National Pension System, NPS. Number 3 is the National Pension System, NPS. It allows deductions under Section 80C and an additional 50,000 rupees under Section 80CCD 1B. NPS is perfect for long-term retirement planning, with a mix of equity and debt exposure. Your money stays invested until retirement, but the compounding benefits are huge. For salaried employees in 2025, this remains one of the smartest ways to save both for taxes and for your future. 4. Unit-Linked Insurance Plans, ULIPs. Fourth on our list are Unit-Linked Insurance Plans, or ULIPs, which combine investment with insurance protection. These plans offer tax deductions under Section 80C as well as tax-free maturity benefits under Section 10(10)(d). Though they come with a lock-in period of 5 years, ULIPs give you the flexibility to switch between equity and debt funds according to your risk appetite. This dual benefit of insurance and investment makes ULIPs an attractive choice for 2025 tax-saving strategies. 5. Tax-saving fixed deposits. Lastly, we have tax-saving fixed deposits, which are a secure option for conservative investors. These FDs offer tax deductions under Section 80C, but they come with a minimum lock-in period of 5 years too. While the interest rates vary from bank to bank, they typically range around 6-7% per annum. However, remember that the interest earned is taxable, so this option suits those looking for guaranteed returns without much volatility. Now that we've covered all 5, let's wrap up with that bonus tip. That bonus tip is to consider utilizing Section 80D, which allows you to claim deductions on health insurance premiums. It not only helps in reducing your taxable income but also secures your health financially. This can be especially helpful for salaried employees in India, as medical expenses can add up quickly, making this deduction a valuable tool in your tax-saving strategy for 2025. By investing wisely in these options, you can effectively lower your tax liability while simultaneously building wealth for your future. Remember, make informed choices and review your investments periodically to ensure they align with your financial goals. Throughout this journey, we explored effective tax-saving investments that will not only help you claim deductions but will also position you for future growth. In conclusion, by leveraging these options, ELSS, PPF, NPS, ULIPs, tax-saving fixed deposits, and health insurance deductions, you can create a robust strategy that safeguards your finances. Staying informed and proactive can enhance your financial well-being, ultimately leading to a secure and prosperous future. Remember, every individual's financial situation is unique, so it's important to assess each option carefully. With informed decisions, you can optimize your tax savings and lay a solid foundation for your future financial security.